This first lesson is gonna be on market mechanics and how exactly I view price. It is an introduction, but it's extremely important because if you understand this, everything else is clear and has its place in some way. First of all, I think that the people, I don't know why they don't know, but there are different markets. So, for example, there are two types of markets. General trending markets like stocks or indices or also commodities in some months of the year. And there are mean reverting market, ranging markets. Currency, Forex, is the main example of a mean reverting market. Why? And this is an important topic. So, if you look at, for example, euro dollar, but every currency, USD CAD is now on an important range. Currency gyrates around. There are no real supply and demand for currency, no? The world doesn't need to buy currency like it does with gold, with copper, with the S&P 500. So every movement, it has to be engineered. By who? Smart money. But they can't move currency like straight up or straight down. I take the Forex market as an example, but think. They can't do that because the entire global economics will collapse. They need to be smart and keep the value of a currency at the same price level. So CAD, if you look in the past, 2 years, it has, moves, but look at the price on the right, 1.39, 1.32. The movement isn't a lot, and so it doesn't affect real world economics too much. They use this to make money because why the markets are being created and why they're still in place? To make money. Smart money makes money on speculation, and obviously they need the counterpart for their operation. So, not us, we are little fish in the markets, but hedge fund, pension fund, or treasury funds, they are all institutional money, so big pockets, but the process, the behavior on the market is the same. They want to invest or speculate, and so they enter on a retail basis, if you know, a big retail. But the people that really control and move the market use them as counterpart. So if you think about that, the most controlled markets, Forex, is the easiest one to trade if you really know how to trade it. Because every market moves, and this is what Romeo said, ICT said, on the basis of time and price. So if you understand the ranges are the key to the markets, and the behavior of price in regards to the time of the range, you can read it pretty accurately. So we take an example, DXY. Right now, DXY is on a clear uptrend with the objective, if we focus ourselves on the last 60 days windows. Oh, sorry. From now, the 60 days. Yeah, so the 60 days high is this one. So the target that I have in mind is this, and we can see that we stopped. We're coming off of this breaker, and after that we created this high probability order block with the closure above the wick of the candle until breakout. Right now we are retesting the body where the major portion of the candle volume resides, while tapping into this weekly FVG. So not financial advice, but I just give you the bias, what I think it will happen. The invalidation will be if we close on a weekly basis under this weekly FVG. So this gives me a framework, because many people see Romeo, and this is important, I want you to succeed as well. So many people see Romeo as the Holy Grail, and it is a great trader, a great teacher, a little bit cryptic, is mysterious in the way he speaks, but the knowledge that he has is amazing. So many people overlooked the classic analysis. So you need to go from the higher time frame perspective. You need to understand, first of all, the market you are trading, because Nasdaq right now it's in a crazy uptrend. So why you would sell this turtle soup? It's not a turtle soup, it's a true breakout PDRA at the range high and rally. I'm not touching on time yet. I want you to know that. For the next lesson I have a lot to say. I just giving you the basics so you understand how I view price. So you need to understand the state of the market you are trading, what market you are trading, and act. This is real trading, and act based on that. So coming back to the XY, it's in an uptrend, and right now the intermediate to long-term bias is bullish. Smart money will, and this is a logic that you need to remind yourself every single time you look at the chart. They are obligated to distribute their orders from a liquidity pool to an opposing liquidity pool. So in this case, they trap people. Of course someone sold that there, of course someone sold here, and into the retracement quote-unquote higher. They trap institutional player, retail trader, they trap a participant in the market into thinking that price will go on one way, and it's okay, because if you have a risk management, you know, I'm wrong, everyone is wrong sometimes, but with risk management you control your losses. But by the way, I'm diverging from my topic. So of course someone sold down there, and they trap people in the wrong spot to accumulate counterpart position to distribute where? Above this high and above this high. Then I said that I will touch on candle range theory. In my journey to trade, I always use candle range theory in some way and never call it this way. Romeo taught me 1 year ago when I did a live call with him. And it's a logic, it's not a pattern. People think that if you have 3 candles like this, if the second one wick only below the first one, that's a pattern, okay? You need to target the eye of this candle. No. Yes, if the context around it is supporting the idea. So, in this case, let's come back to where it is there. Yeah, let's come back in here. So, you do your analysis and you come to the conclusion that the XY is bullish. You are waiting, this is a weekly chart, so you are waiting to see a key level being hit, and what is a key level? Previous month low, for example. If you are bullish, you know what I mentioned, that we're coming off of this breaker block, and the objective is here and potentially here, and this is a retracement. Order flow on the weekly chart is clearly bullish, so you need obviously confirmation, but you go down to the lower. This is a range, no? This is a clear and defined range, and the new month start here. So I'm saying something to build you the context, but you mark your range low, you mark your range high, and so if you expect that the following month will be bullish, you want to see a manipulation down. No, basic of power of 3. What is this range? Now back to the weekly, it is exactly this candle. This is the mean of candle ranges also. And let's finish the example. You at the end you wait for the manipulation down, and the month start developing OTE and go. So that's the logic, and that's how I and Romeo create. So, but for example, let's go back to our. Oops, you're not supposed to see that. Let's take another chart. No. This. So, if you saw my last trade on Twitter of this morning, I took a scalp because I was busy this morning. I was driving and I couldn't stir the chart, but this is the current weekly candle development on the hourly chart. So we got higher. We were coming off of a range, a clear range, choppy market, and I didn't trade Monday, I didn't trade Tuesday, but when I see, I have a friend on Chef that catch this beautiful trade. I missed it, but this is a true breakout of the range. I'm not saying we are going to target this high or this, but this is a true breakout of this range. So vacuum block, pretty rare, but it's another block with a gap in front. And another meaning of candle ranges in the context, and then I will on the next lesson I will touch on some models. I will explain how I trade these models, because I have multiple models and one system, because the system that that not only works, and not only the one that Romeo teaches, it's that, but this system is simply how the markets work. And I will touch on that, and I will talk that, but this is Monday. Now, when Romeo talks about Monday range model, what it is referring to? Simply viewing Monday candle as what? And I posted it on Twitter some days ago. A specific time range, not a price range, yeah, also, but a specific time range. Turtle soup at 50% rejection. Turtle soup at what time? London, before targeting the high of Monday. My trade was, in this context, was here. I missed the soup and of what? Another time. I don't know if you can understand from this, but I will explain this. It's a pretty complex topic. Soup of the Asian range. I missed this. I was not in front of the chart at the time, but I was able to enter right here to target this. And I called the trade on Twitter time-based breaker. A breaker that was formed in the Asian range. People ask me, why you won't expect price to get down there? That's why. Candle range theory. Now, this isn't a candle you can see, but it is a session, and session are candle. London is 1 to 5, a 4-hour candle. New York is from 9 to 13, a 4-hour candle. And yeah, so the basis argument of this lesson are ranges are the key to the markets. And when you watch price, when you watch a chart, what you are looking at, you need to ask this question to yourself. What are you looking at? You need to understand what it is a PDRA. Why sometimes support resistance work like this instance. You need to ask yourself these questions. Now, when you're looking at a chart, you are looking at what? Candles. What is a candle? Now, you can say to me, it's open, high, low, and close. No, a candle is both a price range and a time range, and covers what price does inside this time range. So price open, trade a bit, reaches one high and one low, and closes here. So if price do this inside this time range, the candle will have an open, a high, a low, and a close. So when you are thinking about the CRT, you are considering not a random candle, not always a high volume candle. For example, this Monday that worked like a textbook trade perfectly, was not a high volume candle, was a doji. So we are considering specific candles, specific time-based candle in one specific context. And that's it, that's CRT. People get trapped in the Holy Grail mentality. And this is not what I want to. This is not what I want to transmit to you and other people that learn from me. I've gone there, I've been there, but you come to if you stick long enough in this game, you come to the conclusion that trading is really simpler than it looks. And people tend to overcomplicate it. So the next lesson I will talk to you about how I need to figure that out exactly, but I have an idea for the next lesson. I will begin to explain the system, the only system, and you already know it. This is the fun part, but probably you know it in the back of your mind, but you're not implementing it well enough. You're not understanding it well enough. And it is really simpler than it looks. All price does is move from one price level to another price level, capturing liquidity. And it does this on a time-based schedule. And it's always like this. So, if I need to give you an homework, it's not really an homework because the real things you need to do are in the next lesson. This is an introductory one to know each other and to really understand the basics, but try to view to some markets, not limit yourself to one or two, so go to gold, the S&P 500, the commodities, forex market, even crypto, and look at the different behavior of price, because people often ask me on Twitter, on the DMs, but why you catch this trend on this time on this market and on the other you behave totally different. And I always respond yourself, watch the time I'm trading and the market I'm trading. And people don't understand what I'm saying, but it's so basically simple. So watch, for example, watch euro. What it's doing, not now, forever. What it is doing. Watch NQ, what it is doing. If you understand that, if you truly understand that, you'll be far more profitable. Your rate will increase massively because you can. This is the only way, because technicals and the knowledge come seconds. But you need to understand the current environment. And when Romeo said, watch the higher time frame behavior, he means this daily, weekly, and monthly if you are a short-term trader or a monthly range trader. But what price is doing? Because the intraday price action is very, very affected by this. So this is the homework, and next lesson I will touch on maybe one of the most important topic that it is the dissection of a candle and how to trade a candle. So basically, everything you need to know. Well, let me know if you need also, because I was thinking about it, if do more in depth on PDRA's key levels, because there are some subtleties on key levels that almost no one knows, and I have some very important gems to share. Tell me if you want a lesson on that.